Hello everyone and welcome. In this tutorial I will be taking you through the application of the high-low method. This method is a simple and easy way to obtain an accurate analysis of mixed costs. Mixed costs are costs that have an element of both fixed and variable costs. The high-low method allows for the separation of the variable and fixed costs. It uses the principle that an increase in the total cost can be attributed to a change in the total variable cost caused by the change in the level of activity, since the fixed component remains unchanged. I will go over the sample assessment question related to Bronx Pty Limited to explain the concept. The question states that Bronx Pty Limited collected data relating to its electricity cost and volume of activity over several quarters and found the following. We are given information related to quarter 1 to quarter 4 with regards to the volume of activity as well as the total electricity costs. Using the high-low method, we have to calculate the variable component of the electricity cost of Bronx Pty Limited, the fixed component of the electricity cost of Bronx Pty Limited, and then calculate the total cost at an activity level of 150,000 units. Part A requires the calculation of the variable component of the cost item, which in this case is electricity. The variable cost per unit of activity is calculated as follows. We have to take the cost at the highest level of activity, subtract therefrom the cost at the lowest level of activity, and then divide that by the activity level that's the highest minus the lowest activity level. Let's apply this to the available information. The cost at the highest level of activity, which is 130,000 units, is 95,000 rand. And the cost at the lowest level of activity, which is 100,000 units, is 80,000 rand. We divide the difference between these two by 130,000, which is the highest level of activity, minus 100,000, which is the lowest level of activity. The difference in cost is 15,000 rand, and the difference in activity is 30,000 units. This means an increase in activity of 30,000 units led to an increase in total electricity cost of 15,000 rand. As it is assumed that this increase is caused by an increase in the variable costs, since fixed costs remain unchanged, the variable cost per unit of output must be 15,000 rand divided by 30,000 units, giving us 50 cents per unit. Once the variable cost per unit is known, the total variable cost for a certain level of activity can be calculated. Total variable cost equals the level of activity multiplied by the variable cost per unit. At an activity level of 100,000 units, the total variable cost is 100,000 multiplied by 50 cents, which is 50,000 rand. And at an activity level of 130,000 units, the total variable cost is 130,000 times 50 cents, which is 65,000 rand. Part B requires the calculation of the fixed component. Once the total variable cost for a certain level of activity is known, the fixed cost can be calculated by deducting the total variable cost component from the total mixed cost of the same level of activity. Fixed cost equals total cost minus total variable cost. At an activity level of 100,000 units, the total fixed cost is 80,000 rand minus 50,000 rand, which is 30,000 Rand. And at an activity level of 130,000 units, the total fixed cost is 95,000 Rand minus 65,000 Rand, which is 30,000 Rand. You'll find fixed cost of 30,000 Rand irrespective of which level of activity you use in your calculation. Because remember, the fixed costs remain the same, irrespective of the level of activity, while the total variable cost will differ. The total variable cost increases as the level of activity increases. At this point, the mixed cost is analyzed into its fixed and variable components, and the expected or budgeted cost for any other level of activity can be calculated. Part C requires the total cost at an activity level of 150,000 units. The total cost is the fixed cost plus the total variable cost. At an activity level of 150,000 units, the total cost is 30,000 Rand plus 150,000 units multiplied by 50 cents per unit. And this is 105,000 Rand. You have reached the end of this tutorial. Please remember, you need at least 2 levels of activity and the associated total cost to use the high-low method to analyze the cost. And as in the name, you need the highest and lowest level of activity and the associated costs. Once you have identified these two, you can then apply the formula to break the mixed cost into its variable and mixed components.